the last couple of days, the best really 5 or 6 days, we've had a very, how can I describe it? Just consolidation. The market has had a really large run on the Trump rally, as it's being called. And we hit some targets that I had been projecting, particularly in IWM and in SPY. I had talked about IWM in particular hitting the channel high up between 138 and 139, and it did it, and now it's coming back down a bit and consolidating sideways. So I had said that I thought that we would hit these highs, but I didn't necessarily think that they were shorts. And I predicted that I thought that we would see a situation like we're seeing here, where there would actually be some chop, some sideways action, and it wouldn't be so easy to short. And that has actually turned out to be the correct situation. So it's funny. I think that the best way for me, I took some notes of some things I had wanted to mention, and I think that I've had this conversation now several times, and I was considering mentioning it, and now I think it's probably appropriate. I've had a lot of people ask me over the last, I don't know, week or so, really since the Christmas party time until now, what is my favorite stocks or what's my predictions for 2017? And it's funny, I had said that I wish you would have spoken to me a couple of weeks ago because I was more bullish then. And I said I don't really have any picks that I could just tell you to buy and hold and, ride it for the year. Not one. I couldn't come up with one. And I said that the market has run a real lot, and that I would wait, for a correction to enter into some of these. I said I have certain stocks and names that I like, but I might not see you that often, or it might, not be available. And I'm more of a tactical trader than I am sort of the buy and hold. And when you think about what's happening in the market now, I think that's why you've had this sort of dead heat, this deadlock in the market, because you have on one hand the people who missed the rally completely, who now are sort of struggling to kind of punt it out, and people who are, I guess, long and right, and I guess they haven't had a real reason to sell. They're sort of waiting for higher prices or for their stops to be run with a move lower. And I think and of course you have people who are still very bearish. I did a poll, even just today, it ended this morning, and I asked, basically, are you bullish or bearish? Pretty much, are you bullish or bearish? I mean, I phrase it a couple of different ways, but in this particular question, I said, in which direction will the 5-day SPY consolidation range resolve? And 43 out of 289 votes, so decent vote total, 43% said higher, 42% said lower, and 15% were unsure. That is, first of all, we're below 50%, which tells me there's there's way no euphoria. Everyone who thinks that, we're in a euphoric market and they think that the market is very, overly done and so on and so forth, did not trade in the 90s. I have the fortune of having traded the dot-com bubble. If you want to talk about euphoric, imagine that I was in college at the time. Imagine going into an hour-and-a-half long class, buying shares of Amazon, going for a bathroom break, selling them for $15 higher, and being done. I mean, within the course of a few minutes, a few hours, and this being just assumed. I mean, almost every day, on a daily basis, being able to find these types of moves. There are stocks that no longer exist. I mean, CMGI, you had Amazon back then, you had all kinds of crazy tech stocks. Qualcomm back then was like a hot item. You had AOL, America Online was like, these were huge stocks, and they'd be up 5, 10, 15 points a day, every day for multiple days. I remember I once rode eBay for something like, I don't know, 300 or 400 straight points. It was up $8 every day without a break. That is euphoria. That is not what we have here. Back in the dot-com days, people would say, you know, when we got to Dow 10,000, the question wasn't whether 10,000 was going to be the top or not. It was how long until we get to 20,000, basically, or 15,000. And a lot of people forget that we got to Dow 10,000. It sputtered around there for a while, and then we went to 11,000 very quickly. And then after that, there was, you know, the dot-com crash. So that in that regard, it's similar price action that we could sputter around 20,000 for a while and then go, you know, for another 1,000 or 2,000 points. But now, as opposed to then, when people were looking at 10,000 as sort of like the marker for, you know, what a great achievement, and we're going to, of course, go higher. Everyone, I shouldn't say everyone, but a lot of people now are like, oh yeah, 20,000, that's going to be the top. I saw people today even tweeting out, is today, you know, the Trump press conference, is that going to be the Trump top? And people are all on top watch. You have a bubble in bubble watchers. That's really what is going on. And you have this confluence, like I said, of people who are bearish, people who missed the entire rally, and then, of course, the people who have been right. So that's what this push and pull is about. And if you go a little bit deeper, if you look into the internals of the market, there are a couple of ways to correct. And I did think that there was some correction that was due. You could either do it by time or by price or both, of course. So we've been doing it now more by time than by price. You've had a couple of opportunities here for the market to kind of look below and fail, or, I mean, maybe look above and fail. So I have a lot of people asking me which way do you think the market's going to break? And I keep telling them, and I know this is a very hard answer for people because most people are gamblers in the market. They want to bet and be right, and they have to be in every day for every move. If you, by the way, are a victim of this type of thinking, you're probably going to get your head handed to you at some point. And you probably want to watch my risk management video. It's on my YouTube channel. So my answer to that is this, is you have a multi-day consolidation. Today, yet again, another bit of a look below the 10 and the 20-day and fell, and then the SPY basically closed at the high of the day. You have now 5 days of consolidation in the SPY after we've broken the downtrend. There was sort of a bit of a downtrend, a lull, and then we broke over it, and now we're just chopping sideways. So I think that the proper trade is to be long over the 5 day. Is it 5? 6 days now. Wait, 1, 2, 3, 4, 5. Today makes 6. Sorry, I wasn't counting today. Long over the 6-day high or short below the 6-day low for a right or right out trade. Today we actually got. Did we have a look below and fail? The low here was 25.48. No, we didn't have a look below and fail, but we got to the lower end of range. Same thing happened in IWM the other day, and I said the same thing. That was a bit of a look below and fail, and then it certainly came right back up. So that's the scoop in the market here. You need to either be, like I said, above the 6-day high, and then I think we could rally higher, or we can lose those lows, and then I think we would come lower, and my target for lower would be the 50 MA, wherever it is at the time. So the market now is a lot less overbought than it was a few weeks ago. We are kind of, I wouldn't say we're dead in the middle of the channel yet, but we've spent a lot of time working this off. The 20 MA, the 10-day have all caught up. The 50 is, you know, it's still below us, but, you know, not really all that far. The 200 is still decently below us, and the 100 is, you know, kind of around where the breakout was. So the market isn't necessarily as overbought as I think people realize. So that's my thoughts on SPY. It's either going to be a long over those highs or a short below those lows. So today, and the last few days, you've had a lot of like volatility within a narrow band of range. And I think that that's frustrated a lot of people. It's been, if you watch it and you look at the turning points, it's very clear to me what's happening here. This is all either day traders or algorithmic traders, or the algorithmic traders that like to skewer short-term traders. You've had a lot of this chop up and down. I'll tell you, I can't successfully trade that all the time. Once in a while, I'll pick off something that I see as being pertinent. But I think you sort of have to wait for these things to resolve. And I've noticed the breadth on down moves has been mild, as the breadth on up moves have been mild. Like last Friday, we have poor highs still from last Friday, which means that there's no excess in the auction. I have a video if you want to take a look on my video about it talks about it's a market profile, a basic look. We never actually even bother looking at the profile, but I explain what that means in easy terms. It's sort of like the market profile for, I hate to say for dummies, but it's the easy version of market profile. How to understand what that means without going into TPOs and so on and so forth, because I think that would be a little bit too complicated for that short of a video. Anyhow, as everyone knows, I shouldn't say everyone knows, but if you have mild to mixed internals and you have a poor high, or even a poor low for that matter, there tends to be the back off first before the repair. Last Tuesday had poor lows, so those haven't been repaired. It's possible we go down and check back through those, but it seems like we've had now two look above and fails above the Fed day high that seem to pull back to Fed day VWAP and then re-challenge it again. Now, today we stalled just shy of there. We actually stalled right at the downtrend line from last Friday, and we had a bit of a rich close. Today, the 24-hour VWAP was just below 2264. So if there's a pullback early tomorrow, that could be a potential right or right out buy area. If and when the market can clear in terms of ES over 2272.5, which is the Fed day high, I think the path of least resistance then is higher. The problem what happened yesterday, and maybe the problem what happens again today, and the reason I didn't think yesterday was sustainable was because you went from a morning low, which basically stopped just short of the VWAP, right to the high in a straight line on a huge short squeeze with kind of mild breadth. If it was 8-1 or 5-1 positive, I would have thought nothing of it. Same thing on Friday. I didn't think we were going to be able to sustain those highs without the back off first because you had very mixed breadth. Today, which was odd, and I was messaging with a friend of mine, actually with my cousin, and we were talking about the market, and I said to him, I said, it's not making sense to me, we should be higher. There was one tell in the internals today that was telling me that we should be higher. And one person I noticed guessed this. Who was it? Let me see if I'll give them a little bit of a shout out here. Where was it? I'm just looking back on the stream. RJC, good job, buddy. The answer was the ticks. And it was the ticks. The ticks are sort of like the quickest of the internals. And even as the market was not acting particularly well, the ticks weren't really falling out of bed. And today, if you look at what the distribution of the ticks were, and there are 26 of them every day, I used the 15-minute bar, 20 out of 26 closed positive. So that's the scoop. I mean, the ticks to me were the tell today. And the breadth really, like I said, was mild. I mean, we finished today just still in the 1-to-1 area. AD lines only toward the end really started perking up, but they were really nothing today. And the ticks, that was the tell. If you ever want to know when a market is starting to turn, watch the ticks, see if they're making higher highs or higher lows and where they're distributing. The way I draw my ticks, I have a line around the zero bar. The ticker for this, by the way, in TOS is $TICK. I have a bar at minus 1,000 and a bar at plus 1,000. And then I just see on which side of the zero we're distributing. I look at the trend. Are the ticks making higher lows? Are they making higher highs? And for short-term trading, you could make a lot of assumptions based on that. But today, the ticks all morning were fairly distributing higher. So we looked like we wanted to rally early. We had a double top at the value area high and then kind of fell out of bed on the Trump press conference. So a lot of people who have hated Trump the whole time and have been wrong on him the whole time were all piling on. I saw all the negative tweets and so on and so forth. And we wound up rallying back pretty hard, coming back down again, making a double bottom, higher low. Were today's lows poor? That's the question. If 55. No, they're actually not. There are 3 ticks of excess on the lows, so the lows today are not poor. The high is actually slightly poor, though. Maybe. I have to take a closer look at that later, but it looks to me maybe a little poor. So they've been hating the whole time, and I don't think they really understand why he's good for the market. And I'm going to just take a quick second and explain it, because I think if you could understand that why the market is rallying, you might not fight it as much. We've been in sort of like a Stockholm Syndrome scenario for a while, where you fall in love with your captors, and in this case it's the Fed. We've had low growth for so long that the only way the market can rally was basically with expanding PE multiples with low interest rates. And that's why you've had such a narrow market for so long. The Facebook, the Amazon, the Netflix, the Google, the Nvidia, high growth companies that were benefiting from multiple expansion. They had their growth, and they were benefiting from multiple expansion based on these low interest rates. And as soon as there was a whiff of growth, the money started rotating out of those names into other names that need growth to breathe. It's sort of like oxygen. They were the sort of the aerobic bacteria. Is it anaerobic or aerobic? Anaerobic, I think, where they can live in any condition. But for like copper stocks or oil stocks, or you need growth, you need that GDP growth. And for the first time in a long time, we actually have potential fiscal policy here and a president talking about growth. I really want to stay away from the more political points, and I think most people know where I fall on this line. In full disclosure, I was a big Trump supporter. From the day he announced, I said he was going to win, and I never wavered on that. And the reason, really, for the most part, for me, was it was all about growth. I thought that the country would return to growth, and I think a lot of people get caught up in the noise. The reason why people hate him so much isn't because of his policies or anything like that. It's based upon money. It's all about corporate money. He's not beholden to the special interest. Most politicians, almost all politicians in Washington are. And those companies could be very badly hurt by pro-America, pro-growth policies, and they are in control of the media, and they put out a lot of very negative things about him, and they want to poison people so that he can't get his agenda done and that they can keep lining their pockets with money. It's a vicious cycle. The corporations pay the media and the politicians, and then they do things that are pro for the corporations, and it's just a virtuous cycle. And that's wound up in $20 trillion in debt and a fairly incompetently bloated run government. And that's really where Trump wants to cut things, and that's what everyone is so afraid of. So I hope that shed some light on why I'm pro-Trump and why I think the market likes him and why the market missed it. It's the same reason they missed Brexit. The elites made people afraid of growth. They basically said, oh, the world's going to end and so on and so forth. Take a look at the FTSE. The British market, it's at all-time highs also. The U.S. is at all-time highs. It's because getting out of this debt and stagnation and rewarding growth and entrepreneurship will get us to the promised land. The only way out of the debt is to grow our way out. And that is what he represents, and that's why the market likes it. Whether you agree with his policies or not is relevant. That is what the market wants and is thinking. Can there be a pullback? Absolutely. It is very possible. But in my view, that any growth that we can get above 2%, political, not to be political, but President Obama he's the only president in American history never to have 3 or 4% growth at any point in his term. We are coming out of 8 years of 2% growth economy. Just the thought of a 3 to 5% economy should get the market going potentially even stronger. So there's a couple of headwinds that the market does have to fight to maintain itself, and I'm going to be very candid about that, and one of them is a very important trade that I'm about to discuss. 2 components here that, and if you could guess these, you also are doing a good job guessing the market. 1 is interest rates, and 2 is the dollar. So the dollar has been very, very strong. So there's an upside and a downside to the dollar. Yeah, someone's pointing out the ES is up 300% in 8 years because interest rates have been zero. Simple. That's it. You've had companies doing corporate buybacks, and you've had people piling it, paying out dividends. There's been no growth. And if you look into the real economy, it's really not so good. You look at the job quality, the amount of wage growth. It was actually down year over year this past year. Average hours worked was down. I mean, healthcare costs were up. I mean, the economy, real people have been taking it pretty tough, outside of Wall Street. So Wall Street isn't always the best gauge for the overall economy. Anyhow, back to what I was saying. So the dollar is a double-edged sword. If you have a collapsing dollar, you don't have a lot of foreign money coming in. A rising dollar attracts foreign money because they not only make money on their securities, but they make money in the currency it's priced in. So it's sort of like a double whammy. The big problem we have is that a lot of the S&P does business overseas. And when you have a rising dollar, if it's too fast, is a very, very large problem for those companies. So the dollar now is basically, it's in the process of breaking out, but it's also now potentially in the process, of a pullback. You have a big doji bar today that was kind of an outside of range bar. Today was a quintessential look above and fail. So, but you also have the consolidation funnel below, which I'll go over in the weekend review video, and a 50-day moving average. So what I'd like to do with the dollar is above today's high is a long. I think the dollar would go a significant amount higher if we get above the high. If we get below the low, I'd like a right or right out short in the dollar. For a pullback, if we lose the 50, maybe we get to the 100 MA. I don't know if we'll go that low. Maybe we retest 100 again. But I like the idea of playing against today's range because it was a big range and it was a bit of a look above and fail. So that's my scoop with this. If we start building out sideways here, this could even, believe it or not, set up for a head and shoulders top. I've done some technical work. If you double the range, that basically takes the dollar up close to 109, $109. It's not a done deal necessarily, and if the Fed is more dovish than hawkish, the dollar could fall down pretty quickly. So let's see what happens here. You had a snap of trend about 5 sessions ago, and you're now below the kind of the island reversal low. So anything below 101.95 starts becoming a little more vulnerable to me, and if you start getting below this the 5-day consolidation, I think it's a short, frankly. And I don't think a lot of people would be expecting that. What does a weaker dollar mean if there is the breakdown? And notice what I tweeted today. I said that the weak dollar, and this was before they all took off, would be good for FANG. Why? Because we had lower interest rates are falling, and you had the dollar. These are all multinational corporations. Remember Facebook, when in the past earnings, when they've talked about difficulty, it's been because of a strong dollar. All of those stocks took off as soon as the dollar started having the outside reversal day. Also, you had the bonds rallying again. Interest rates are falling. Again, PE multiple expansion, great for those stocks. So today's range in the TLT, today was technically a breakout. I wound up taking a little bit of profits just because we got enough of an IV push that I got my price that I wanted, which was basically close to the 123.15, which was the 2009 crash high. I actually think this could rally up a little, even more significantly, maybe even to 127s. So here's a great trade with the TLT. So we were today for the first time. Yesterday for the first time. Today was the confirmation. We had a close over the 50 MA. Anything above today's high, I like long, and anything below today's low, I like short for a right or right out trade. Very simple, plain to the point. But if the bonds start rallying again, that will be good for the tech names, and it's no surprise that the NASDAQ is rallying. This has also been one of the things that have been very frustrating to the shorts. I find that they tend to fixate on things that make their case. I find bulls do this too. They fixate on like one or two things that kind of make their argument for them. And the case before was that the small caps were doing poorly, and then when they started rallying, it was good, but now that they're lagging a little, it's bad. But the tech has been picking up the slack, and these are big names. There is a level in QQQ that we're coming to that I am a little bit cautious about, though. 124.51. That is the 1.618 Fibonacci extension of the big range. So we may run into a little bit of flack over there. So we're going to have to see how the market takes itself. That's definitely a good spot, I think, to at the very least book some profits. But we're doing it in a grinding fashion. I mentioned about Apple, and this was, to me, sometimes you have to see, like, I know Apple very well. I've been trading the stock for a very long time. I have a pretty decent track record with it. Not every time, but, you know, I've done pretty well with Apple. So a couple of things about Apple that I don't know that everyone would necessarily notice. It's been stalling on the backside of the kind of the old uptrend line. Today we're kind of just riding it. But today, overnight, one of Apple's suppliers, for some reason I can't think of the name, reported crappy earnings and was down really big. Apple should have been down huge today. What I expected Apple to do and what it did is two very separate things. It opened down a little bit. It rallied to slightly test green. I wound up thinking to myself that would be it, and it should have dumped hard after that. It didn't. It closed very strongly. And I had mentioned, and then it took off, that Apple was handling itself very well, and I think that the stock is looking higher. It had a breakout over a head and shoulders kind of top over 112.39. That was a long trade. And today I wound up booking some of those profits. I had been out and then I was back in, and today I booked a little bit. But that's more because I thought 120 for a pinning could be an issue, and we're close to there, and I didn't want to risk the pullback risk. No, but I know about Patrick Swayze. I quoted him today. Someone's asking if I know a Swayze guy, or I know Patrick Swayze. I'm half joking, but no, I don't know that guy. Anyway, so this is to me looking like it could go higher. The channel high would be close into the 122s. And if you take a look at my weekend review video, there's a lot of levels I mentioned in there. I don't want to be redundant, but go back and take a look at my some of my videos, and you'll see what I'm talking about. So that's let me just go through. I talked about Apple. So I like Apple, though, on pullbacks to the 20 MA. Like if you sort of missed it, the 20 seems to be the level that's held. So pullbacks to the 20 MA I like, and I don't really want to get too bearish on this unless it really breaks the 50 MA. Thanks so much. Someone let me know about there are apparently some trolls going around asking about this situation. What else would be possibly taking off? Amazon, to me, looks a little interesting here. So rightfully, last week, and of course everyone thought I was crazy, of course we were going right to the gap fill. I said no, I thought 800 would be a bit of resistance, and we've consolidated for a few days. I was hoping for a pullback to the 100 MA as a re-entry long. It doesn't look like that. It doesn't necessarily look like that's going to happen. I like Amazon now, either short below the 2-day low for the bare minimum of pullback to the 100 MA. Over the 2-day high, though, I think you can take long for maybe now the gap fill. So let's see. That's my take on Amazon. I like it either long over the 2-day high or short below the 2-day low. We talked about the dollar. I covered the ES levels. I covered the TLT. We're moving right through these, right? Oil. Let me talk about oil. So what was interesting to me, we talked about the positive ticks. I'm just doing a quick checklist. I talked about the market already have running a lot. Fed day range we discussed. TLT and DX. Wow, we got through a lot. So today, CL, oil, finally stood for oil again and not Craigslist. It wound up doing a pretty decent reversal here. I think a lot of people were very bearish on it. I talked about selling puts in Exxon yesterday, and that worked out pretty well. So we have an important situation today. So did we close? I want to just see the close. The high of day was 52.37. Today's close was 52.37. So a little inconclusive. We stalled at the 20 MA today, and we closed basically right at the top of yesterday's bar. So we need to clear the high of day today and get back up over the 20 for continuation. If we were to lose the 2-day low, I think it's a great right or right out short for a move back to the 50 MA. But as long as we hold over 52.11 to 52.22, the path of least resistance, in my view, would be higher. I'm a little cautious, though, because we stalled at the 20 MA, and that had been the support on the last two rallies. So what was support should be resistance. If it's not resistance and we go higher and above, I think we're going to go a lot higher. So over today's high, like tomorrow or the next day, I think would be a long, and then back below the 2-day low, I think is a quick shot down to the 50 MA. So that's my view on oil. The VIX. I had talked about this. This is just kissing the low end of range. This is pure directional play down here. If you want to play VIX, the options tend to be expensive. My advice to you would be just buy longer dated puts in one of the indices, and just wait. That's sort of my my advice on that. That's really the only way I like to play the VIX, either as a range gauge or for when to buy or to sell protection. I'm just looking through these names. We had a move. I wanted to describe, I'm going to go over this a little bit more. This Del Fresco's, I got long this stock the other day, and I really wish, this is DFRG. I talked about it in real time, and I talked about why I wanted to get long. I'm going to go through this more clearly in the weekend review video and show you guys the anatomy of this setup so that you could identify this on your own. And it worked. I wish they all worked out like this, right? You buy it, and then the next day it's up 10 or 12% or whatever. So why did I like Del Fresco's? This was up on a potential of a private equity or some kind of takeout issue. Also, the potential for the Trump tax cuts being good for them. You had a big run-up, and then a multi-day without a break pullback, basically to the 50 MA, I'm sorry, the 50% fib, which was also a small consolidation zone, and the trend line. I was actually thinking this could potentially go to the 61.8, but I wanted to be in, and for me, the difference between 1576 and 1511 wasn't prohibitive. I'm a big boy. I could sit through a little bit more pullback, but I was really confident that would wind up being the low in that area. And the next day, this thing just gapped up huge, and then today continued. I would use today's low of day as a stop, considering 1715 is an important level, and that was today's low of day. So you could use that either as a right or right out short for a pullback play, or as just more, in my view, more as just a stop if you took the long and you want to protect some of the gains. But I will cover that and show the anatomy of that trade and what I was thinking in the weekend video. Facebook. So Facebook is starting to repair. I'm getting a little cautious on this one though. Into earnings if it rallies too much more. I'll tell you this: as long as it holds the 100 MA. I'm fine with being long. If it were to lose the 100 MA, which is basically today's low of day, I like it as a right or right out short. We're getting close to the gap fill. I had talked about a long trade to the 200 MA. It actually well exceeded that, and it looks to me like it's going to fill the gap. I think a lot of people are going to get very excited about Facebook, and they're going to buy in at the wrong time. And this could potentially run to the backside of the old up channel, which I think to people who aren't looking at what I'm looking at, and I will again review this in the weekend review video, will get very bullish, and it could wind up being like a double top situation. I'm going to go over that, the anatomy of that. I will say this. I've liked Facebook for a very long time. I've exited a heck of a lot higher from here. I started talking about selling it at 128 and was basically fully out at 130. And then I've tactically traded it here and there between then and now. I was a little concerned in there. I'm concerned about two things in Facebook. One is the huge, first of all, when I started getting into Facebook, I hated the IPO. I turned it about $20. It got to 19, and then I've, for the most part, never looked back. I was one of the early people who said that Facebook would get to 100 and maybe 103 and then beyond. The story is starting to change a little bit. It needs another quarter to confirm that, but last quarter, and this is what got me cautious, was they lowered their growth forecasts. Everyone now talks about how cheap Facebook is based on forward earnings, but if those earnings are slowing, it's not as cheap. So if they have another quarter like that and the earnings are slow, it could be a very big problem for Facebook. I think the stock will be down very, very badly if that happens again. I don't know that that's going to happen. I'm not saying it will happen. I'm not even saying I think it's going to happen. But I'm saying if it does happen, the stock is in a lot of trouble, and it'll probably have topped, at least for the short term. I would have liked for Facebook actually to have broken down into the next earnings and had a ton of people, the shit scared out of them, and then the stock could have really run. We could have had a good setup. Now, the setup could be a short for earnings. I have to see how far this thing runs, but it seems like the gap fill is, a done deal. It may even get back to the 128 area. So that's my scoop with Facebook. Amazon, to me, I talked about already. What else? Baba, I sort of was bullish again on that one, and I said I thought we'd get the 100 MA test, and we got it. Now I'm I would say a little bit more cautious, but I like the fact that we basically have 2 days worth of lows that are the same. So below the 2-day low I like is a right or right out short for a pullback maybe to the 50 MA. Over the 2-day high, I think it'll probably get to 99s, maybe a hundo. Ameritrade got my target. I said I thought we'd get 47s. We got into 47s. 47.81 is the 1.618 Fibonacci extension. We are close enough. So any rallies here, I like booking profits, and I like a pullback. Ameritrade basically owns the market. They're a very well-run company with great people there, and I like buying it on dips. So 50 MA, if there's a pullback, then I'm tally-ho, so to speak. Chipotle, this thing has been a messy baby. This thing rallied back up to the top end of the range. It's just riding the 200 MA. A couple of days consolidation is all right. So the earnings gap range, the high of day is 420.23, and then the low is 408.20. I either like a buy stop above the high for a long for another 20 points up, basically, or a short below the low for a retest of the 100 MA. So that's the setup. Above the 2-day high, I like long. Below the low, I like short. Keep it simple, stupid, as they say. Everyone's excited that President Trump is using Twitter, me included. I'm a huge fan of the service, but the stock is a piece of junk. I think the problem for Twitter, and now it's stalling at the 200 MA, I think the problem for Twitter is that they don't, like a year ago, they talked about adjusting character count. That still hasn't been done. They need 2 back-to-back solid quarters where they can return to growth and show that there's a pulse over there. I think Jack Dorsey's a really smart guy, but he's still only really part-time over there. He's really, I feel, more involved with Square, which I do at some point, by the way, think is a takeout target. Square has been performing a heck of a lot better. Again, that's one I like on dips, but the problem for me with Twitter is that they're not implementing their changes fast enough, and they're getting their lunch eaten by the likes of Instagram and Snapchat. I've said for a while they need to become a little bit more like that. My fear with Twitter is that it's starting to feel a little bit BlackBerry-ish. They better get it together. The stock I don't think is terribly expensive. I have a little long in it, and it's just something I'm holding for a while. We'll see. But that's the scoop of Twitter. Shake Shack. So wow, this was eerily timed. I said don't fall in love with the stock. It was basically the high, and then the next day it was downgraded, and the stock has been collapsing ever since. It's at the lower end of range. I said I like the idea of selling some puts between 35s and 33.26, which is the gap fill. And that is the scoop with that. I've played this game with this stock for so long. I've taken heat on it at times, but it always seems to wind up being a winner. I like when it's down into the low mid-30s, selling out of the money puts, and when it gets up high, I either I just take it off. It's that simple. So we're holding the 100 MA. We're right below. We're still below the 50 and the 10. I'm sorry, the 50 and the 200, but the 100 MA here is important. If we can hold it and bounce higher, I think that the stock will go back up, considering we're at the low end of the range. If you lose the 2-day low, then I think we will probably wind up filling in that gap fully. Exxon, this is one I've been playing for a while. Pretty good track record, I think. I've taken some heat on this one once in a while, but I said that I thought that 87.44 to 89.01 would be the kind of the new range, and it worked for a little while, but it wound up filling the gap here. And I talked about selling puts at the gap fill yesterday, and today it rallied, which was nice. The absolute low of the end of the range here and a trend touch would be 83s. That was a really big level for a while, but 86s, if you go back and you look at some of my videos from like a while ago, I said Exxon 86 is the key to the kingdom, and it seems to be again. So I like the 2-day range here. If we get below it, I think you could try it short for a right or right out play for a bit lower. Above the 2-day range, I would think higher. But Exxon is just getting smacked around a bit. But longer term, I think that the stock, I think it's going to a hundo, but I don't necessarily know that it isn't going to have to go a little bit lower first. Oddly, if you look at the market cap of Exxon and you compare it to like 10 years ago, they've done so many share buybacks that it's even less. That's definitely a very well-run company. Although after their last earnings, Chevron seems to have taken up the mantle of, most favored nation in the big integrated stocks. IBB. So this thing has been a mess for a really long time. Today, Trump's comments didn't help, but it was already, to me, looking a little bit strained technically. I'll show why on the weekend video. But today was basically a pullback to the 200 MA. You have the 50 right under it and the 20 right under that. And you have the important band of 271.77 to 275.40. And we bottom just below that. As long as that can hold, you could try a right or right out long. Below it, I think it's going to be a short again for a move back lower. I think that the story with this is drug prices. You have all these stocks like Gilead, and they're all cheap based on earnings, but that's assuming prices stay up and earnings stay up. I think that the compromise would be, and I'd like to tell this to the president-elect, that he could tell the drug companies they just need to lower their prices, but what he'll do to compensate them for it is allow them to extend their patents longer, so they could have lower prices but make that higher premium for longer. And I think that would be a win-win, a great compromise. I'm a big fan of extending patent duration for those types of stocks. I think we've FireEye. This is one I have a small long on. I'm kind of like Twitter. I don't really watch it that often. It's been a total piece of junk. Today it got right to the downtrend line. This really needs to clear the 100 MA. If you can clear the 100 MA, I think that this thing could accelerate higher. But as long as it's below the 100, it's sort of just if this then that. So that's it. I think I'm going to end it here. We've gone a while. If you want to watch my video again, you can see it on my YouTube channel. That's Justin Pulitzer Trades. And if you're not following me on Twitter, my handle is @JustinPulitzer. And let's have a great week, trading week, and cheers. Please leave me some comments. Your comments help me make the videos better. So help me help you. Alrighty. Thanks, guys. Take it easy.